Good morning, welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, December 4th, 2008. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London, 12:30 p.m. in Bermuda, 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEXTV. Yesterday, we interviewed Roger Crombie down in Bermuda. We have received a number of complaints from viewers who have told us that the audio quality of Mr. Crombie's part of the interview is poor. If you do listen to the interview with a pair of headphones on, you can actually hear him. However, it is faint. Excuse me, it is faint. What we will do is we will have a transcript of the entire interview up no later than Monday. If we have it any earlier, we will put it up and put it. Excuse me. If we have it any earlier, we will put it up and put an announcement that the transcript is available. But the transcript of the Crombie interview will be up on Monday. We have some breaking stories, some economic news. New orders for manufactured goods in the United States fell 5.1% in October. This is the biggest decline in 8 years, according to the Commerce Department. New orders for durable goods fell a revised 6.9% compared with a 6.2% estimate for last week. Non-durable goods orders fell in October as well, 3.4%. Also this morning in a conference call, an analyst conference call, Prudential made a little bit of news. The company's chief financial officer said, that's Rich Carbone, said that even if the Standard & Poor's stock index falls as low as 700 by the end of the year, which is at this point 27 days from now, Prudential will still maintain a risk-based capital ratio of 370%. That level puts it within the 350 to 400% margin typical of a AA rated insurer, which is in fact Pru's rating. The Standard & Poor's 500 just finished trading at about 866, so hopefully Mr. Carbone's theory will not be tested. Now to our main news. More economic news. The European Central Bank cut its benchmark interest rate by 0.75 of a percentage point this morning, joining other European central banks in lowering borrowing costs as they try to ease the economic impact of the financial crisis. The bank based in Brussels cut its so-called rate by 75 bips down to 2.5% from 3.25%. Earlier today, the Bank of England reduced their key rate by 1 full percentage point down to 2% from 3%. Also earlier today, the Swedish central bank sharply reduced its main interest rate. The Riksbank cut its main rate by an extraordinary 1.75% down to 2%. This is its biggest reduction ever. So we're getting closer to the zero interest rate margin that everybody has feared. More economic news in the U.S. New claims for jobless benefits fell unexpectedly last week, but the number of people continuing to claim benefits reached a 26-year high. The U.S. Labor Department reported this morning that initial claims for unemployment insurance dropped to a seasonally adjusted 509,000. This from an upwardly revised figure of 530,000 for the previous week. You may recall that on Monday, the National Bureau of Economic Research said that the American economy fell into a recession as far back as December of 2007. The 4-week average of initial claims, which smooths out fluctuations in unemployment, increased overall to 524,000, which is the highest level since December of '82. A little seismic news. A 6.1 magnitude earthquake struck off the coast of northern Japan this morning. The quake was about 180 miles north of Tokyo. There have been no reports of any tsunami warnings, as well as no reports of any damage or injuries. The London broker Cooper Gay announced that the Portuguese corporation Sone has increased its investment and shareholding in Cooper Gay from 13.6% up to 32.1%. Sone originally acquired a minority shareholding in Cooper Gay back in June of 2007. Since then, Cooper Gay has announced the signing of about £31 million of senior debt financing. It's revealed that with a number of further acquisition opportunities at various stages in development, Toby Esser, the Cooper Gay CEO, said that the investment from Sonnet gives us the financial capacity to expand our business and implement our strategic plan. Sonnet's decision to increase their shareholding demonstrates their belief in Cooper Gay and the mutual benefit derived from our partnership. Some big news coming out of Everest, which is located about 20 miles from us as the crow flies. Everest Re announced that Ralph Jones III is going to assume the post of President and Chief Operating Officer effective next Monday. Mr. Jones will replace Thomas Gallagher, who will become Vice Chairman and Chief Underwriting Officer. Jones is a relative newcomer to Everest. He joined their board of directors in September of 2008. He had previously served as Chairman and CEO of Arch Insurance Group until retiring in July of 2008. Before Arch, Jones had been CEO of Chubb Specialty Insurance. Joseph Taranto, Chairman and CEO of Everest, said, "We're very pleased to have a highly experienced executive of Ralph's caliber join the Everest team. Together, Tom and Ralph will enhance our positioning as we move to take advantage of the exciting opportunities we expect in 2009. From your lips to God's ear, Mr. Taranto. More fallout from Hiscox's move yesterday, which was the subject of the Roger Crombie interview mentioned at the top of the show. London reinsurer Hiscox has parted company with Robert Furness, the CEO-elect of its Bermuda subsidiary. The Insurance Insider announced this late yesterday. Sources have confirmed that the search is ongoing for a replacement CEO for Hiscox Bermuda, or whatever is going to be left of it, which was launched in late 2005 with $500 million in capital. Back in September, Hiscox unveiled the former Imagine Group head of underwriting, Mr. Furness, as the future CEO of Hiscox Bermuda. It's understood now that the current Hiscox Bermuda CEO, Robert Childs, remains on course to return to London in April of 2009, where he will resume his roles as head of the group's international business, group chief underwriting officer, and chairman of Hiscox USA. Some news from London reinsurance broker R.K. Carville. 3 executives from their company have joined Tradition Financial Services, which is Carville's joint venture partner on the CHI CAT Futures Initiative. Trading Risk is reporting this. Patrick Ganelli, Carville Senior VP from the firm's Bermuda office, and New York-based VP Matt Carter are going to be joined at Tradition by Steve Breen, former EVP and president of the New York office. Ganelli will continue to work out of Bermuda, while Breen and Carter will operate out of Tradition's U.S. office. Carville announced the joint venture with Tradition, which is a large player in weather and energy derivatives, which produces derivative brokerage services for the CHI products in February, and has traded $60 million in notional volume of the products on the Chicago Merc this year. $60 million in notional is not exactly a grand total. According to Senior Vice President Richard Hill at Carville, Trading Risk understands that Carville joint CEO John Kavanaugh will continue to service the CHI derivatives contracts, which pay the holder, principally reinsurers and energy markets, a fixed amount triggered by the wind speed and footprint of a landfalling hurricane on the coast of the U.S. or the Gulf of Mexico. The stock market is up about 10 points. As we speak, the CEOs of the 3 American car companies are once again in front of Congress pleading for a bailout. And an interesting sidelight, as compared to their visit last month when they came with no plan, simply showing up asking for help, and each flying in on their respective corporate jets. This time, Mr. Wagoner, Mr. Nardelli, and Mr. Mullally actually drove, respectively, each of their companies, GM, Chrysler, and Ford's hybrid car products from Detroit to Washington, D.C., a 550-mile trip that takes 8 hours. So for 8 hours, the CEOs of each of these companies were ensconced in the passenger seats of these specialty vehicles as a made-for-public relations campaign rolled across the American Midwest. We'll go to a word from our sponsors and come back with the rest of the news.